This is Eric Mwathe with Mwathe.com. Going into the last trading week of June 2012, let's take a look at the NASDAQ daily chart here, which is showing us that the market so far is finding resistance at the declining 50-day moving average. We had tried to move above that, but we were rejected. So that's where the market is trading, generally trading below the 50-day moving average and above the 200-day moving average. So at some point, we're either going to see this market try to move out of that 50-day moving average or come back and test this 200-day moving average before we either move down or bounce off that. But that's a scenario, market trading below between these two trending averages there. If you take a look again at the NASDAQ, you see that this line here, or this general area, which was a general area here, which going back about 1.5 years was resistance here in 2011. A nice breakout point there. It has now turned into an area where the market was finding it difficult to move above that level here for a couple of weeks, and then we moved above that, and now we are holding firm above that level. So we'll see whether that's going to propel the market to the upside. For now, trading in a range, I think with a bias, as far as I'm concerned, that bias remains a little bit down to the downside on a day-to-day, week-to-week basis. If you take a look at the Dow from a weekly chart, you see that we lost all the gains for the week. We had been above the 10-week moving average, and now we are back below the 10-week moving average. Not good. Also notice that the RSI slightly above 50, opening the possibility for a big down week whenever we move below 50 on a weekly basis. So again, it just seems to me that the market is poised here to probably pull back again. I also notice that the MACD could very easily slip and move below zero, cause another slide in the market. So the fact that we could not hold the 10-week moving average here, is a small sign of a market that is not strong yet. The only way the bull market takes place is if you trade above this 10-week moving average and above the 50-day moving average. Also notice this area here about Dow 12,810 is where we are stalling. This was a resistance here going back again to 2011, and we can't seem to hold that level above that right now. So there's resistance coming about Dow 12,810 somewhere. So if we move above that, then you can say you want to play breakouts. But as long as we're below this level here, you just want to watch and see and wait till the market recaptures that level before you can get aggressively long. Take a look at the Dow from a daily chart. Again, you see that we try to move above the declining 50-day moving average, could not hold. So now we are trading between those a declining 50-day moving average and upward trending 200-day moving average. So at some point we are going to have to resolve higher or above either one of those moving averages. So it's kind of like a wait and see right now. I personally think with a bias to the downside, but the market will tell us which direction it wants to go. Dow Transports gave up all the gains for the week as it tried to recapture the area above the 50-day, above the 10-week moving average on a weekly chart, and failed. So again, just slight indication of markets not being as strong as you'd think, because we were up here for a little bit, gave up all the gains for the week as far as the Dow Transports are concerned. If you take a look at the S&P 500, again, same scenario, rejection at the declining 50-day moving average, also rejection at this level here, which was a prior high. So if this area here, we've come back, we broke down here, come back, we tried to move about that there, we've been rejected. So a resistance there, and we'll see how this market behaves in the coming days. But still trading between the 50 and the 200. I think to me it seems like we're going to test the 200-day short term. If you take a look at the S&P 500 on a weekly chart, again, lost all the gains for the week, traded at the 10-week moving average or slightly below. Also happens to be an area where we have this resistance from a former high going back to 2011. These weekly closing highs where we hit that intra-week and pull back. So I think the market is still, again, closed slightly above 50 on the weekly charts, above 50 on the weekly charts. Any slide below 50 could lead to a significant pullback on a week-to-week basis. The last time we had a big drop in the market, the biggest drop in 2012 was here, this week here, and that corresponded with a break and a move below 50 on the RSI. So let's watch this level here. If we close below 50, expect that to be a big down week net. Take a look at the Brazilian market, and I want to show you some world markets are showing the same thing. Unlike the US market, so the Brazilian market is below the 200-day moving average and tried to hit the 50-day, which is declining, and failed. So failure at a declining 50-day moving average is not good. That tells me that to expect that these lows here are gonna be under threat as far as the Brazilian market is concerned. Take a look at the Brazilian market from a weekly chart. You see that the rejection at a declining 10-week moving average, hit that during the week and pull back again. Really not very strong. So we are really trading at an here resistance or resistance. So that rejection at the 10-week moving average and support that came from this trend line here is we're either gonna at some point move above the 10-week moving average or break below this trend line and see lower prices again, or move above the 10-week moving average and start building to the upside again. But right now trading below or between this as resistance and support. So we have gonna find either a breakout or a breakdown in the coming weeks. If you take a look at the French market again, just want to show you that it's trading below the 200-day, which is declining. Found resistance at the 50-day moving average. So not as strong as the US markets. If you take a look at the German market, here you'll notice that also rejection at this price channel highs right there, and also happens to be an area of a declining 50-day moving average right there. So you have multiple rejections coming from the 50 and from this price channel top lines. Again, trading very close to the 200-day moving average. I think net result is a break of that 200-day moving average. If you take a look at the Hong Kong market, you see we are trading below we found upside resistance recently at the declining 50-day moving average and at a declining 200-day moving average. My net interpretation here is we eventually test these lows here we made in June. So even while the markets are reflecting some kind of resistance at the moving average, we'll see which one the market decides. Otherwise, be cautious out there. I think more than likely pullbacks, if anything. Otherwise, we need to recapture the 50-day on most world markets. Eric Muadh with Muadh.com. Good luck, peace, and blessings.